Good day to you. Today we're going to chat about the schedule of replacement value, also known as the SRV. Okay, this is a short explainer and we can go into much more detail. However, the idea is to keep this short. More detail can find in the insurance guide, the sectional title insurance guide, which is a useful booklet for trustees or interested owners. Okay, so this is just as an explainer, which goes hand in hand with a short explainer that we make available with schedules themselves. Okay, so first of all, understanding the schedule of replacement values. Okay, so it looks just like this. It's a schedule, and it's supposed to be a schedule according to prescribed management rule 23.4, which is actually quite specific. It must set out and show the estimates of the replacement value of the buildings and all improvements to the common property. And it must also show the replacement value of each unit, excluding the member's interest in the land, and the total of such values must be equal to the value referred to in A. Okay, so in a nutshell, in layman's terms, it must be a list of section numbers. We like to put the unit numbers next to the section numbers, and then showing the total of each person's unit sum insured. Remember, that's the section plus the undivided share in the common property, the unit sum total, and then the total of all of the units. Okay, so that's the basics. But we've got a nice example, and it's become pretty much the industry standard on how to set it out. Okay, very important. This is not something which is prepared just before an AGM by photocopying the insurance policy's schedule or endorsement. We don't think that's a good idea. It actually is very specific. The rule is very specific. It says the body corporate must prepare before every annual general meeting. And in fact, the old rule used to be more specific and used to say that the trustee shall. Okay, so the body corporate must prepare one of these, and it can't just be your existing policy. Come on, you know, you've got to apply your mind to it. You must see if there's anything that needs to be added. You might want to check that the escalations were right. You might want to actually bring the sums down a little bit. And then after your AGM, that's when you actually go to your insurance and provide them with a copy of the approved schedule so that they can update the policy. Okay, so the schedule is very important. It's to be prepared before an annual general meeting, and we always suggest that you keep this thing up to date, keep it as a live document, up to date throughout the year as changes happen. Okay. All right, so you can see the example. It's pretty clear. Now we're going to go through bits and pieces of the schedule so that you can going to break it down a little bit, you know, almost cut out little pieces so that you can understand each part on how we lay them out. Okay, so the first part is the summary. You know, we say that you should summarize the valuation. In fact, you know, there's a rule just before the schedule rule that actually states that a body corporate must actually value the buildings every 3 years, at least every 3 years, and that the schedule should actually be drawn up on the basis of the valuation. And such valuation is supposed to be presented at the AGM. Now, short of having to put a 20-page document in everybody's pack every year, when it's only done every 3 years, we suggest the summary. It's more practical. You show the summary at the top of the schedule, so it sets out, shows you how the schedule was set out, and then you can bring a copy of the most recent valuation along to the AGM. We think that's a good idea. Okay, so the first piece of the top part, it's not set out in the rule that it has to be there, but we think it's a very, very good idea, and we've proven it over the years that people like to see things like the building rate per square meter, for example. That's part of it. People can actually see what they are insured for as a rate per square meter now, and that's pretty important to some people. It'll be based on the developer's finish, and then they can make their own call. Okay, then we get to the sum insured. And that's that little block in the middle. We think we always put a little square around it. Those are the important figures, the three figures you could call it. You've got the total sum to be insured, and then your two escalation figures, your escalation for the period of insurance and your escalation for the period of redesign and reconstruction. Those figures are more complex, and I can explain that in a more detail on another forum. But the most important thing is just to set it out like that so that the owners can see that you have separated the sum insured from the escalations, that it's all not lumped together and being double insured. Okay. It also lets you know at a glance how much all of the buildings are insured for in a relationship to the summary at the top. Okay. Then we go to the door numbers and section numbers. Obviously, if we're going to list all of the sums of each unit, we need to have the number. And a lot of people go by the door numbers, I notice. So, you know, whenever there's a claim, I'm phoning from number 5, or I'm phoning from number 3. Well, you might be door number 3, but actually you're section number 10. So from an insurance point of view, it can be quite confusing. So when it comes to claim stage, we need to know both numbers so that we don't get mixed up, and we can actually apply both numbers. We always state clearly on a claim form which is the door number and which is the section number. Otherwise, 2 years later, if you come for a new geyser, perhaps, you know, door number 2 and section number 3, and then number 3 comes along and needs their geyser changed, and it gets rather confusing as to whether it was in fact changed before. Okay, so I think it's a good chance, an opportunity for owners to check their section and door numbers. You know, have a look at the sectional plan and just make sure that your door number and your section number actually line up. Okay, then we look at the floor areas in PQ. You know, much can be said about this, but check your floor area. I mean, maybe you're a fairly new owner and your floor area isn't updated since, you know, there was an extension. You bought, the previous owner had done an extension, and perhaps your square meterage is incorrect. Quite important, because when it comes to claim stage, you don't want to be underinsured because you never had the correct floor square meterage there. And it affects your PQ as well. Okay. Then the additional sums insured. This is perhaps the centerpiece of everything for an AGM. The valuation would have been done based on a developer's finish. If a development was, say, 5 or 10 years old or new. So your valuation is based on an average developer's finish. Or if it's an older building, the valuer might have had a quick peek at maybe 3 or 4 units sections, I should rather say, to get an idea of the finishes. And if you are more have done a renovation and an upgrade to a large degree, then you use the addition sums column to increase your sum insured. It's very, very cheap insurance, so don't, you know, not do it if you think perhaps you should. 100,000 Rand extra in additions, some additions column would mean that you would be paying an extra 8 or 10 Rand per month per 100,000. Okay, it's usual. Could be 12 Rand, could be 10 Rand, could be 8 Rand. So let's say 10 Rand per average per 100,000 per month. So very, very inexpensive to make sure that you're properly covered, and that gets billed to your levy account, normally on an annual basis. Okay. The addition sums column is also used for the additional sum that your bank might want. Remember, this is out of our control or out of the body corporate's control. You've signed your bond document with your bank, your agreement of loan. You basically gave the bank the rights there to insure on your behalf when you signed those documents. So if you are not happy that the bank has made an additional sum effectively over insuring you, then use the schedule. The schedule is designed in a way that you can actually take it to the bank and say, look at the valuation. It's more than adequate. Come on, guys, this is a replacement cost. This has nothing to do with market. But that's actually the owner's responsibility to attend. It's also a point, just make sure if you're a new owner that the old owner's bond amount isn't still showing there. You can always ask us to remove it. Okay. Then we look at the total column. So if you look at the totals, I think it's worth mentioning because, again, as I mentioned, the rule actually states that the total unit sums have to be shown, but it's difficult to understand your rate per square meter when all of the common area is included. So what we do here is we just strip out the items that the valuer has done. So it's not common property per se, because common property includes halfway through your wall and your roof ceiling and so on and so on. But all of those common property areas like the squash court, the gates, the fences, the walls, the electric fences, maybe the parking deck downstairs or whatever the case might be, we just, if that's listed separately, then we'll show it separately. Okay, and it just gives you a better idea of what your section sum insured is without all of those additional common area items, say for your half of the wall and the common area parts in your building. All right, so, you know, in broad summary, we're just touching on a few things. We think it's a good idea to use the schedule of replacement value as a checkbox or a tick box scenario. Check that your schedule of replacement values have been properly prepared. So if you go to an AGM and there's just a photocopy of, you know, the insurance policy schedule in there, you know, somebody has been a little bit lazy. I think they haven't actually followed the rule properly. Has it been properly looked at, or did they just at some stage send the valuation to the broker? Yeah, so, you know, rather prepare a proper schedule. Check that the valuation was attended to, in fact, over the last 3 years. You know, very often they slipped up, or last year it wasn't brought up that they were going to do it, it wasn't budgeted for, but get it done. It's very important. If you haven't done one recently, the chances are you're either overinsured or underinsured. And, you know, get the figure right. You'll save some premium if you can bring it down a bit. And of course, you certainly don't want to be underinsured. Okay, ensure that your section is adequately covered, that any improvements over and above the standard finishes are added. Okay, this is your opportunity. And then the owner would just instruct the body corporate to instruct the broker to increase the sum insured. You don't have to give details. You can actually just say, I want 100,000. I want an extra 200,000 cover. Okay, check your square meters. That's something, as I said, you know, if you're a new owner particularly, just check more or less that the figures are correct. Check your door number versus section number, as I've said, and then also make sure that the escalations are not included in the sum insured, but in fact are shown separately like we have on the schedule. Okay, so, you know, that about wraps it. You know, please do, if you are obviously you're watching this video, but please give us a like, or you know, hit the little bell. But please go have a look at our YouTube channel. We've got plenty of other stuff on the YouTube channel, and you know, take a look at our website. Some of the resources are there. There will be many, many more explainers in the months to come. Thank you very much.